Hello and welcome to BQ Prime. I'm Hiral Dadia. Joining us on the show today to discuss as to why Quess Corp board has withdrawn merger scheme with Allsec Technologies. We have Mr. Kamal Pal Hoda as who's the group CFO joining in. Welcome to the show, Kamal. And my first question coming to you is, firstly, if you could just help us understand what's the reason for the withdrawal of the merger scheme with Allsec Technologies.
Sure. Thanks, Hiral, and good afternoon, everyone. Let me give you a bit of a background. See, we acquired Allsec back in 2019, and we continue to hold 73% of Allsec. It was June this year when board of both the companies had decided that we'll go for a merger,
Hmm.
and since then, the overall market scenario has constantly undergoing change, and with the elapse of time, the merger was announced at a swap ratio when the share prices of Quest was on the uh, closing price on the record date was close to 616 rupees, and that time the Allsec share price was 413. Now, with the volatility in the share market and the prices where they are right now, board of both the companies thought about it, and in the interest of shareholders of both the company, we thought probably we'll relocate. Board will relocate at an appropriate time at some point in future.
Okay. So overall, I mean, with all of this, why not relook at in terms of from a valuation perspective and renegotiate, the modalities of it, and why call it off?
See, for us, what we've been doing, Hiral, is we've been integrating, let's say, the best practices of both the organizations since from the day we acquired Allsec. So we acquired this company in 2019. Since then, it has been our subsidiary. Uh, we've leveraged the huge access to the customer base that Quest has. We've leveraged that to enhance the revenue of Allsec in the market. So from a prior acquisition, where Allsec was doing a revenue of close to 230 crores. In last 3 years, despite COVID, the last year number was close to 320 odd crores in terms of revenue for Allsec. So we've been leveraging our customer base, we've been leveraging our management skills, and the tech space that we are into to bring Allsec. So that effort we'll continue to do. So we'll continue to, like I said, integrate the best practices of both the organization to scale up the market capitalization of both the companies. And merger, obviously, it's a board decision as and when probably at the right time relocate and come back, because right now at least the share price and with the volatility of the share prices going around, probably it's not the right time for us to approach the market again.
Right. So how soon do you think we will relook at it? Will it be in FY23 itself, or do you think it'll be something we will look at in FY24?
See, that is obviously not for me to comment. It's a board that probably will look into it, and hence I would probably not comment how soon or how late. But I would probably again want to mention that we continue to do what we were doing. In terms of improving the profitability of both the organizations, integrating whatever possible platforms we can integrate. We've been integrating the finance, we've been integrating
Hmm.
HR, and a lot of best practices, so that as a joint entity we deliver better to the market.
Right. So, Kamal, would it be right to say that overall the merger is not something which is absolutely called off, but it's something due to market conditions which is moved probably ahead? What will be the timing is something which is just unknown now.
Yeah, absolutely. You're right.
Right. And overall, again, from a business perspective as well, how have you seen the second half of FY23 pan out vis-a-vis FY21? Because clearly, if you've seen, the markets have been slowing down, specifically from an IT perspective as well. So how are you seeing the market scenario now?
No, you are absolutely right, Kiran. So, if I have to support that with numbers, see, H1 was phenomenal for us. This year, H1, on an overall Quest level, all four platforms put together, we added close to 66,000 headcount. The
Mm.
comparative number for entire full year FY21 was 73,000. So we almost did what we did last year. We almost did it in H1. But starting, end of quarter 2 is when we experienced slowdown, typically more in IT and ITS space, which continues in quarter 3 as well. But having said that, we obviously have industries which are still continuing to do hiring. We continue to see hiring happening in BFSI space. We continue to see hiring that's happening in the manufacturing sector. So Two places where obviously hiring has slowed down or frozen is, like you pointed out, one is IT and ITS, and second is obviously e-commerce, which is more to do with the festive season. It picked up in Diwali, like it happens every year, and then it goes down. The only difference this year versus last year, this year, Diwali came in a bit early. It came in October. Generally, it is in November.
Mm.
The scale down happened also very quickly. November, probably everybody, especially the e-commerce companies, scaled down to the level. So, those two places we continue to see a slowdown, which is, e-commerce hiring and IT and ITS. But like I said, two sectors which we continue to probably look bullish is, BFSI as well as manufacturing, where the headcount addition continues to happen.
Right. And overall, from the different segment perspective, where are we seeing value coming in from workforce management to GTS to operating asset management as well as the product like businesses? Where do you see growth coming in from?
See, in terms of specific growth call out, so obviously staffing, I just told you, right, that there is a section of the staffing which is slowing down, which is IT and ITS, and then there are others which are pulling it ahead. Again, on an operating asset management, we had a stable quarter 2. We, the footfall for again IT and ITS has not come back to the pre-COVID levels what it used to be. So that segment is continuing to probably see a very, very slow growth. But the other two businesses are doing as per our plan. Both the GTS as well as the product-led business, they are delivering as per what the plans we have for both these businesses.
Right. Apart from that, overall, our strategy from here on and milestone is the path to 20%, right? That's what we are aiming for. How is the journey going on that front?
See, the journey is we are back to basics. With the slowdown, what we are also doing is we are looking at our cost structure, our cost to deliver, our indirect cost, and we have a robust cost management program which we are running across organization right now, so that we reset our cost levels to take care of the slowdown that we are also experiencing across the economy. And once we put our cost structures right, we anticipate that probably mid of quarter 4, the hiring is expected to come back, and there is reason to believe that. See, a lot of companies are going through their big enterprise level implementations of SAPs and other IT platforms, which they've slowed down a bit, but they can't leave those implementations midway. Plus, they are also experiencing attrition. So probably there is a slowdown right now, but the hiring has to come back probably by February, March is what we believe. And by then, if we have adjusted our cost levels right, then we are again set for our stated objectives, which you mentioned.
Right. So, Kamal, if you have to compare a H2 versus a H1, do you think if things go well on track, will fourth quarter itself be capable enough to actually meet what we achieved in the first half of FY23, or will it be better?
See, I can guide you or tell you directionally, right? Directionally, what we can do internally is what we are doing. Some of it is obviously dependent on market, which is probably the slowdown which we are experiencing. And we are hopeful that, like I said, by mid of quarter 4, the hiring should come back. Once that is back, we have no reason to believe that we'll not be able to deliver the results that we've called out for us in the market.
Right. And overall, from an operational perspective as well, how is that scenario panning out internally? Are we seeing cost-cutting measures? Because that's what usually we do, right? The moment we see some bit of a slowdown, there are a lot of operational efficiencies that come at play.
Yes, so we are doing all that, Hiral, like I mentioned, we are doing all that, and we are trying to be a right-sized organization for us to address, what challenges market is throwing upon us. But it's not that, we would want to go very aggressive in cost cutting. We're just trying to be, at the right cost levels to take opportunity as and when it comes back, the hiring starts. It's not that everything is frozen, we still have, if I, again, from a numbers perspective, if I tell you, we had probably 30,000 plus open positions at a similar time around last year. We are right now having it at 20,000 range. So there is definitely a 35 to 40%, reduction in terms of our open headcount. But we anticipate it to probably go back again in quarter 4. And yes, we are just trying to right size our costs.
Right. And very lastly, Kamal, any inorganic or organic growth opportunities that you're seeing for the business?
Nothing very actively right now, but we've again in past said that we would probably want to simplify our structure and concentrate more on core business. So one asset we did, leverage and sell out in H1,
October itself, yeah.
which is compliance. We'll continue to do, as and when probably, we are into some small businesses which probably do not overall fit in our scenario. If we get a right opportunity and a right valuation, we'll probably like to, divest at the right point in time. But right now, nothing active that we're looking at.
Right. All right, Kamal. Thank you so much for giving us that direction. BQ Prime. Happy New Year in advance as well, and speak to you soon again.
Thank you, and festive wishes to all your viewers, and thanks for having me.